Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about 20% returns on your investments, 30% returns on investments, 40% possibilities. Unbelievable. It has to do with licensed and registered securities in the stock market, ETFs. Oh my. Please stay tuned. We have a lot to talk about. Get your pen, pads, and papers ready. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. I want to thank you so much for being here. And please, once again, share the videos because you never know who's out here trying to get help. That's right. And who does not want to earn 20% or more or 15% or more annual return on their investment? That's right. Licensed, regulated by the SEC because we're talking about the stock market that you can buy with any brokerage account. That's right. But first, let's go to the Stop Struggling Now YouTube channel page and podcast page because I need you to know that there's a few members of the channel that are shown here courtesy of YouTube. Notice there's a join button over here on the right hand side. Why would you want to join to become a member, not just a subscriber? Because under the community tab, members receive special messages specifically for them. They receive 1 or 2 videos per month specifically for them. On our Wednesday night live stream, only members with the icon can be in the chat room. Every now and then, the gear that you see me wear for Stop Struggling Now, the SSN Nation, they receive discount codes. That's right. And again, they're the only ones that can join me on any live stream because they have the link under the community tab to join me on the live stream that they can discuss anything they want alongside me on our live streams. That's the perks. Now, let's get into the money making aspects. Let's start at the top. Look at these return rates right here. Yieldmax ETFs, ladies and gentlemen. Look here. Yes, your eyes are not deceiving you. This is based on September 10th stock price. All right, just keep that in mind because there is a possible variation on stock prices. And I'm going to explain to you how that occurs. Let's just say for the sake of argument, like right now, TSLY is around 50%. If they're giving off $7 dividend annually and the stock price is $14, that means that is 50% dividend return. Now, the question is, you want your money working for you, so what should you do? You should reinvest it, right? So that'll actually give you a higher yield because every month you'll be buying more shares, which now means the next month you'll be gaining more return on your investment. But we'll just keep it simple, 50%. Now, let's just say for the sake of argument, the stock price goes to $21. Well, now, instead of 50% for the next money you buy, because you have to keep in mind, if you put in $10,000 and you're getting 50% return on the shares you bought at $14, and they continue to give out the same amount of dividends of $7, the money you already put in is going to be getting 50%, which is $5,000 every year, as long as they give out the same amount of dividends. Now, let's change that into the stock price goes up to $21. $1. Well, now you're only getting 30%. So the next time you go in and that batch of money that you decide to put in there, let's just say it's $10,000. Well, now you will get $3,000 because the stock price went up. Hopefully that you understand, right? Now, vice versa. If the stock price went down, let's say it goes down to $10. Now you also will have a boom because $7, $10 mean a 70% return, which would be unsustainable probably. But nonetheless, if they're going to give you $7 annually for a $10 stock, let's just say, again, it probably will not work that way, but $10,000 invested now means $70,000. So hopefully you understand the amount of money that you put in matters. And then if you say, hey, I'm going to buy later, well, then whatever you put in later is going to probably have a different rate of return due to the stock prices fluctuate a little bit, right? So hopefully you start out that way and understand exactly what I'm talking about. And if you don't, you can always comment down below. Let's start it off. Here is OARK 29.1. Here is something you can click on, a prospectus, just so you can understand how they are operating. Full disclosures. They have several Yieldmax ETFs based on the stocks, but look at option income strategy is what they're doing. They explain everything in their prospectus, so you have to understand that, right? Now, I'm not going to go deep off into the prospectus. That's your job. You need to study and understand what it takes to make investments. You have to feel comfortable with those investments. I'm going to go over here to the disclosures. It's on the disclosure tab, social media disclosures. Now, I will go directly to, some people would say, well, what are their holdings? Naturally, you should find out what the fund's holdings are, right? So here's what the fund's holdings are. They give you a fund overview. They tell you 29.81. They tell you the SEC yield, 4.78%. All right? Look at what they are doing. They have an expense ratio of 1%. All right? Think about it. There's an expense ratio. They're telling you net assets is 84.87 million. Isn't that beautiful? Okay, shares outstanding. You get all this information here. Performance, the end of quarters, 1 month, 3 months, year to date, 1 year, since accumulation. They give you all of this. This is all taken into consideration what you need to find out. Because these high return rates, are they possible? Well, there may be more to it. Maybe it's not returning 29%. Maybe it's only returning 15%. That's for you to do your own due diligence. But here's what they're returning so far this year as far as distributions per share. Clearly, you can add this up, which I have not done, but that's $1. That's $1.75. That's $2.50 roughly. That's $3. That's $3.36. That's $3.90. That's $4.50. That's about $5.10. So it's around $5.50 January through September distributions. Well, if the stock only costs $14, that's 30% for sure returns right now. And I believe they had 29% on the website. So that's exactly what the distribution is at this price point. It could change if the stock drops to $10, then the percentage again will go higher. Now, here's the other thing, what we came for, the top 10 holdings. You can see here what they are holding. Treasuries, ARK, ARKK, is that an ARK fund? ARK, AR cash and other. So this looks interesting. You can download all holdings here. This is your homework. Prospectus, summary prospectus, fiscal Q1 holdings, semi-annual report. Why do you get all this? Because this is SEC approved, unlike a lot of and almost all crypto projects, for instance, right? This is what they're saying. You need to have this information to make investment strategies. Look, Charles Schwab, SoFi, Robinhood, Fidelity, Ameritrade, E-Trade, Vanguard. All these is where you can buy OARK, and probably on most brokerage accounts you can buy these. All right. On all Webull's, Robinhoods, make sure if you haven't downloaded your free shares of stock, please do so down below in the description box. So that's just for that. Now let's get into this, because this right here is exactly what we're talking about. $14 share price. They're saying 52% is the yield based on the dividend being $7.36. See how simple that is? 14, 7, that is around 50%. That's what it's giving off so far. Monthly payouts. And as you know, here they go. That's why I like stock analysis, so you can see for yourself. I want you to know, because the ex-dividend date, this is, if you're new to stocks, this is, you need to own the stock. I just call it, put this in your head. Buy the stock the day before, because then when the next dividend comes out, so all you had to do was buy it like September 7th, you would have, long as you're recorded by September 11th, because that's what would have happened, you would receive 58 cents per share that you bought, and payout starts September 18th. And then next month, it just keeps rolling. All right. So that's what you need to know. I mean, some people would say you can still buy on the 8th, which is probably true. But again, I just say if you're trying to do that, that's why the price increased, because September 8th was on Friday and people were jumping in. All right. So the stock price, check the chart yourself, was a little bit lower a few days before. So keep that in mind. All right. Some things change because people start jumping in or jumping out depending on their strategies, depending on the option trading as well, because they have expiration dates. So a lot of factors can change a price. Now, let's move along. Here is OARK. Write these all down, everybody on podcast. The first one was T as in Tom, TSLY. It's a Tesla option income strategy. That's what they're using. That's why they use these names. Okay. OARK, innovation option income strategy. 38.19% dividend yield, because the stock price is $14.64 as of September 8th. $5.59 dividend year to date so far. I believe that's what it is. Dividend history, you can actually count up the numbers yourself and figure it out. Now, let's keep moving, because otherwise this is going to be a very long video. But if you want that 20% plus annual return, then I suggest you stay tuned, because we have a lot more to share here. Now, here is APLY, which is an Apple option income strategy. They're talking about a dividend yield of 8.83%. You know what's interesting is that beats Apple's dividend yield, but you may not get the Apple stock appreciation by doing it this way. But nonetheless, 8.83% dividend is $1.70. Not bad. Let's keep moving, because we have NVIDIA. NVDA, a hot stock, but they have the NVDY ETF, which is giving a 15% dividend return right now, which is still decent, $3.45 per share. Then I'm going to take off from here. And what I'm going to show you is one of my favorites over the last 3-4 years, ORC. And one of my other favorites, P as in Paul, S as in Sam, EC as in Charles. Go from 20 down to 10 or 11. But nonetheless, those are old standbys as well, giving off dividend payments every month as well. Now, we'll get into it on the screen here just to show you. But Orchard Capital, Orchard Island Capital, ORC, you see it here, 20.73%. What more can I tell you about that? That is beautiful, right? Some of these are going to be on the right-hand side that I'm about to talk about as well. They're all on the list except for the NASDAQ one. But let me go to the next one. ARR, which is currently at $4.83 a share, and that's giving a 19.88% based on this stock price. So everything you put in at this stock price that you buy at, it's going to be earning 19.88%. When the stock price goes up and you decide to buy more, that means your yield is lower. That means that pocket of money is going to have a lower yield. Combined, they might have, it'll turn into a little bit lower yield. But nonetheless, 19-20% is one hell of a return. IEP, which is an Icon Enterprises common stock, again, 19%, ladies and gentlemen. So, how many of those stock symbols have I talked about so far that are 19-20% or higher? There's a few. Now, let's keep going. We'll start going down a little bit. MVO Oil Trust, 16.67%. Gotta love that. AGNC Investment Corp, which is AGNC as a stock price, 14.66% or 14.86% right now. IVR, 14.81%. That's right, the stock symbol is IVR. NLY, once again, 13%. So if you like those type of returns, then you need to start doing your homework. The reason why I say this is, think about this very, very carefully. Federal Reserve should start reducing their interest rates in about 3 to 4 to 5 months. When they do that, if home prices do not come down, the stock market has nothing to do with home prices. But the stock market will take off because you're able to borrow money or start to borrow money at a lower rate, which now means they can borrow money and then buy stocks. Borrow money and potentially earn more in stock return. Think about it. If somebody tells you, here, Eric, you can borrow 5%, and you're sitting here looking going, wait a minute, I can earn 20%. So that's a 15% return, plus I get paid every month, so I can pay the 5% that I owe. This is incredible. That's what will happen, and this is why the stock market will go boom. It'll explode, all right? Especially for all the wealthy hedge funds, mutual funds, ETFs that know they can get 20, 25, 30% return. You think they're not going to borrow at 5%, 3%, 7% when they're getting 40% or 20%? Easy arbitrage. So let me know what you think in the comments section down below. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, but you have to start somewhere, ladies and gentlemen. Even if you have 50 bucks, even if you have 100 bucks, make your money work for you. Get in the habit of making money work for you. And so then that mindset will reek. Every time you throw your dollars out the window, you're going to be thinking, does this give me a return on my investment? You'll start thinking that way. Then you won't frivolously be buying things that have no intrinsic value other than it makes you feel good. Things will change dramatically because you'll be thinking every dollar I could be putting over here earning 15, 20% or higher. And with all that said, come along for the ride. Keep your head up. Keep moving. And I'm out.